Welcome back to the Research Finance Education Series. This video will explain the purpose of payroll accruals and how to incorporate them in your financial review, reporting, and invoicing. We will also guide how to handle payroll accruals if salary expenses are to be moved to another activity or accounting unit. First, why is it important? Unity Health Toronto prepares its financial statements and reports through an accrual method when possible. Accrual accounting is an accounting method where revenues or expenses are recorded when an event occurred rather than when payment is made. This event may include a contract or invoice is executed or when hours are worked. When speaking to payroll expenses directly, we record payroll expenses when the worked hours are incurred and not when the payment is made to the hospital staff. The following slide will illustrate this idea. In this example for the month of March 20XX, the first 2 weeks of worked hours fall on the same pay period and will be paid to staff on March 14th. There is no accrual. The final week of March, however, will be paid on April 7th, represented by the red line. The last work week of the employee incurred in March is recorded in March to capture the true work expense for March, even though a cash payment is not paid out. This is a payroll accrual. To illustrate this concept numerically, the first two purple lines in March represent hours worked and paid at $3,000.15. The last red line in March represents hours worked but not paid in March at $745. At the start of April, the accrual is reversed for $745 because on April 7th, when the payment is made to the employee, it contains hours worked in March, which was expensed in March. To avoid double counting the expense of $745, it is reversed in April, equal to the accrual in March. In April, the same accrual principle is applied in the final week of April to capture the corresponding expense worked in April but not yet paid. Considering cash payments, accruals and reversals will ensure your reports and invoices capture all expenses for the applicable months. The accrual is not an estimate or a best guess. It represents work, time incurred but not yet paid. It is an accurate representation of the salary expense for the month. Because we follow an accrual-based accounting when possible, the expense is booked into our system when the event happened, not only when cash is received or released. At the end of the day, please include all cash payments, accruals, and reversals when reporting or invoicing salary costs to your sponsors. If you have any questions about this presentation, please contact your research financial analyst or researchfinance@smh.ca. Thanks for watching.